According to Wall Street analysts, shares of Chinese stocks are expected to increase significantly in the next few months. Analysts state, Chinese companies on the New York Stock Exchange will increase their evaluation as a result of China's agreement to open their books to U.S. auditors. U.S. auditors will for the first time have complete access to firms it seeks to verify on the New York Stock Exchange. Analysts expect China's profits to increase more than 8% after this announcement. In a recent interview with Yahoo Finance, Chief Investment Officer, Brendan Ahern, stated, I think the Chinese government is going to do whatever they can to stabilize growth in the market after the recent audit announcement. Chinese stocks saw heavy losses this year, but should bounce back soon. From this point, NIO, XPeng, and other Chinese stocks are a go. Here are some more thoughts from Ahern.
And Brendan, I know you've long been pretty bullish on especially some of these Chinese companies based on their fundamentals. I realize this is more about the future of, where they're actually going to be listed, but does this change your base case at all around these companies? I mean, has at least one geopolitical risk, if you want to call it geopolitical, has that been lifted, or is it too early to say?
Well, I think the major overhang really over the last two years, call it, almost 2 years, has been, you had China's internet regulation, their anti-monopoly, antitrust movement. That argument is largely that's behind us. And then you had the HFCAA, which, if you put yourselves in the shoes of an active emerging market portfolio manager, you're very worried about buying some of these US listed China ADRs because you're just worried about a new HFCAA news to come out, and that would make you look bad. And so I think today's news allows the 2% underweight to China relative to MSCI emerging markets for that underweight to get rectified, that we should see a revaluation of these securities. These securities that we hold within KWEB, our China Internet ETF, they're at half the PE, half of the PEG ratio relative to US internet companies. We should see a bit of a re-rating there, which should be good for the names.
Brendan Ahern, always good to have you on the show. CraneShares Chief Investment Officer. Appreciate your time.
That's what's been happening this week in the world of NIO stock analysis and predictions. If you haven't subscribed yet, make sure you click the subscribe button at the bottom right and subscribe to Financial Health right now, so that next week you'll get the inside scoop on the latest developments to keep you and your business on the leading edge of NIO stocks and predictions. If you enjoyed this edition of NIO stock analysis and predictions, leave a comment and please hit the like or share button. We'd really appreciate it. Are you still watching and want more? Check out last week's NIO stock analysis and predictions by checking out our NIO playlist.